Hi, this is James Shugg with an on-the-road version of Westpac London's end-of-day report for Monday, November the 14th. Just have to get the date right. Look, positive sentiment in European stock markets at the start of the session was eroded gradually throughout the day as optimism about the formation of new governments in Greece and Italy turned into more realistic pessimism in terms of the likelihood that the governments would actually be able to achieve the budget deficit reduction that's going to be required if those governments are to receive the ongoing bailout support under current arrangements in coming months. With no other particularly important economic data released in any other part of the world, apart from in Europe, where we saw industrial production figures for September, which were very weak, with a 3% fall in that month, led by Germany, France, Italy and Spain, the major economies in Europe. The overall vibe in markets today was pretty negative, and that flowed through into negative sentiment in US markets as well. That's about it. There's nothing much else to report other than that at the close, the London market was down 0.5%, the German market down 1.2%, and the French market down 1.3%. In the US, still trading, of course, and it's about 6 p.m. at the moment. We've got the Dow down 0.9%. It's at 12,049. Commodity markets were sort of mixed, with gold down 0.5%. Copper prices up 1.2% today. Oil down 1.2%. That's at $97.81 a barrel. The Aussie dollar dropped about 1.5 cents over the last 24 hours. It's at 1.016 against the US dollar. On the data front, it's a particularly busy week this week. Lots of US data, although in the very near term, Tuesday, we're watching for two things. That is the minutes to the Reserve Bank of Australia's November meeting, which was the one where they shifted to the view that policy was now more neutral. We'll get a bit of an explanation in those minutes about just how far above neutral policy is, and that might give us a feel for the extent to which we might see further rate cuts in the near term. In Europe, we get the third quarter GDP estimate, the advance estimate this is. We're looking for just 0.1% growth. That will be, on our forecasts, the last quarter of growth for at least 4 quarters in Europe, with an extended recession now the most likely scenario for Europe going forward. And that's about it. I'll be back in the office tomorrow.